Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, I'm Joe Schmit, joined as always by Paige Driscoll, and this is Basis Loaded, an in-depth breakdown of the latest NDPSR report, starting with butter. This butter number coming in at 247.32 represents a plus 9 to the CME one-week average of 238.06. We traded 0 contracts on the CME that week, so nothing to pull basis lower. You'll notice here at 247 at that outsized basis moving higher than normal volume. Almost 4 million pounds, well above our 3.5 million. It's interesting to note if you go back to the January 7th number, where we also had positive basis, we had a revision. And they actually took the butter price from last week up and added 1.1 million pounds. So a big revision last week, putting in some weight at a higher than expected level. Following suit this week, also higher than normal basis on big volume. So the manufacturer is unloading a lot of product at this, call it 250 neighborhood, prior to some lower levels on the CME. Moving on to cheese blocks, 212.74. That's a minus 2 to the CME one-week average of 215. Now, we traded 9 loads on the CME that week, so you would expect lower than normal basis. I think the reason we're getting this minus 2 is because the CME actually traded up 9 cents to get to that 215.13. So going from 204 to 215.13 and then back down to $2 next week, you would expect lower than normal basis, and that's what we achieved. But what's interesting is as the block on the NDPSR continues to hover around, call it this 211 to 213 level, despite all the volatility that we're seeing at the CME, the NDPSR seems pinned to this 211 to 213 neighborhood. And at that elevated level on this report, 212.74, the manufacturer was able to move 14.2 million pounds. So more than 1.5 million over our expected volume. We are only 2 weeks into this oscillation at the CME between, call it the 203 to 215, and the NDPSR stuck at, call it this 211 half level. And that's where we should remain for the remainder of the January pricing cycle. Moving on to barrels, 183.54. That's a plus 4 to the CME 2-week average of 179.25. Now, we average 9 loads a week at the CME during the 2 weeks that I used to come up with that 179.25. And at that level, the manufacturer was only able to garner a plus 4 basis. So 4 over the CME average of 179.25. Moving 14.1 million pounds. So higher than expected volume on the NDPSR, about 500,000 over, however, lower than normal basis. So that's a theme for both categories of cheese, lower than normal basis on higher than expected volume. It's interesting to achieve that 179.25 2-week average in the barrel. This is the last full week where we had mid-80s barrel prior to taking a next leg down at the CME. So I would expect that basis to widen in the weeks to come, maybe even a little bit higher than the normalized 4 to 6 over for the remainder of the January pricing cycle. And in whey, of course, the CME just trending lower. What else would you expect here on the NDPSR than higher week over week, 44.53. That's a plus 4 to the CME average of 40.38. And this is the second of 3 weeks here at the 40 cent level before again adjusting to a new price level at the CME. So we still have another week at this 40 cent level. What's interesting is that typically in whey, we always like to look at the prior week's NDPSR. So that would be that December 31st week ending, 43.71. So the manufacturer was able to call more than a 0.75 cent premium to prior week's NDPSR and at that premium, moving almost 5.5 million pounds. So that's a big basis. That's a really nice price, and that's really nice volume. Things in dry whey seem to be well supported despite the lower levels that we're seeing at the CME. I think the real story in whey might be outside of dry whey and in the higher end whey proteins. We're hearing that the higher end whey protein price is facing some significant headwinds at this point, and that's going to be rough sailing with an elevated dry whey level as we move into the future. And then lastly, non-fat 139.74. That's a plus 6 to the CME 1 week average of 133.44. Traded 13 loads at the CME at that level. Plus 6 is higher than normal basis, and at that elevated basis level, the manufacturer was able to move almost 19 million pounds. So that is impressive basis and pretty good volume, just a little bit under our expected 20 million in non-fat. Now, of course, that 133.44 level that I'm using for this week's CME average, that's the last of we're going to see of the mid 130s, because we are down 3 on the next CME weekly average, down 3 after that. And then, of course, this week, the non-fat market is adjusting to a new price level significantly lower. So plus 6 basis right now, as we're on the edge of the cliff, I would expect, similar to what I was talking about in barrels, that as we move forward, the NDPSR has a hard time keeping up with the losses that we're seeing on the CME, and that basis goes from a higher than normal plus 6 even further out in the future. So this is week 2 of 4 for the January pricing cycle, currently getting a January class 3 price of 1950, January class 4 2010. If you carry current CME prices out through the remainder of the February pricing cycle, getting February class 3 1810, Feb class 4 1885. So the break in cheese has pulled the class 3 price back under class 4. Not historically where it's supposed to be, but it's certainly been a dynamic that we've grown accustomed to as of late. We'll see what they have in store for us at the CME in the weeks to come. Until next week, I am Joe. On behalf of Paige and the whole Everag team, thanks so much. Bye.